Hey traders, Happy New Year and welcome back to the FXC YouTube channel. Today I'll be doing a two-part series. The first part being a video explaining how to mark your charts up from scratch, and then the second video will be a continuation doing a top-down analysis now that the yearly candle has closed. So hit the thumbs up button and subscribe if you haven't already. Now let's get into it. So as mentioned, in this video, I'll be explaining how I mark my charts when doing a top-down analysis. And I'll do this for all the time frames, but only focus on EU for this video. So starting with the yearly time frame, it's probably good to mention that Euro only existed after 1998. And then in 2002, that's when the coins and the banknotes were introduced. So although there's history prior to 1998, I would mostly ignore it. So if we start with the top-down analysis, if we start to mark our charts, one thing I like to do to start is mark the range. So the yearly range is actually from here. So this would be a range low, and this would be the range high. And then what we want to do after that is we want to look and see where prices in this range and what has it done in that range. So you can see we started with a low here, came up with a high here, and then since then it's been coming down. So where are our important PD arrays? We have a fair value gap here at the bottom, and you can see it was just recently filled. So this is a bullish yearly fair value gap. And then we also have a fair value gap right at the top, which has also been recently filled, mostly filled. And then besides that, there's really no inefficiencies in between. So what we have is liquidity at the bottom and liquidity at the top. Aside from that, there's really nothing else. So I won't go into too much details explaining or analyzing the yearly chart, because the whole point is just to mark the charts. In the next video, I'll do more detailed analysis on what this could mean. So now if we go onto the monthly time frame, so doing the same thing, let's start by marking the range high. And then marking the range low. And then we look at the range high and the range low. This is actually the area that we'll want to focus on. So we can see at the bottom we have a fair value gap that has yet to be filled. And then what do we have above? We have a fair value gap at the top. It's been partially tapped into, but I will leave it, as there is a chance that it could be completely filled later on. There's a fair value gap here, but as you can see, it's been filled. And small little gap here, but it's already gone through it so many times, I don't think it's worth marking. And that's really about it. In the current range, we do have a small little fair value gap here. So this could be an area that gets targeted at one point or another. So this will be bullish monthly fair value gap. And then aside from that, really not so much. We could go and mark the demand, but usually on these time frames, I only focus on the liquidity points. So this would be, let's say it's a long-term buy-side liquidity. This one could potentially be short-term buy-side liquidity, but I'll leave it as long-term. And then at the bottom, we have sell-side liquidity. And in the current range, there really isn't anything worth mentioning, at least on this time frame, other than this monthly fair value gap, quite a ways down below. Now moving on to the weekly time frame. So on the weekly time frame, I'm going to hide the buy side liquidity because now this is our range high on the weekly time frame, and I'll hide the sell side liquidity because this is now our range low. On the weekly time frame. So we use this as a current range of price, and you can see price is currently trading within the overall range of price. And you can see a lot of the fair value or the inefficiency has already been filled. The only thing that we've done here is we've actually come into the order block, but there really isn't so much in terms of inefficiency left behind. This has been partially filled here, but completely filled here. And yeah, that monthly fair value gap, I don't really like so much anymore, because if you look on a weekly time frame, it's been traded through. So there really isn't so much in terms of inefficiency left on the downside. The only thing I can see is that we've come into order block here. Order block bullish, and I'll just show it on the weekly time frame. Yeah, so we tapped into the order block, and you can see we've already started to react off of it. But like I said, I don't want to go too much into analysis. I just want to mark the charts for now and then focus on the analysis in the next video. But aside from that, there isn't really any inefficiency that we can see. We just have our buy side liquidity up top. We'll likely create some inefficiency here, assuming we don't reverse and push up from here, which is a possibility, by the way. But if we don't come back up into this area, then we will have an area of inefficiency that price may go back for before pushing, potentially pushing lower. Okay, so now moving on to the daily time frame. So once again, I'll hide the buy side liquidity, as the high is going to be the range high on the daily time frame, and over here we have our low, our range low on the daily time frame. And what can we see? It's actually quite interesting. So we have an area of inefficiency here, almost tapped into it, by the way. We had inefficiency above, and we've come nearly into the 50% of that. There is some inefficiency above as well. Did tap into it partially, so it could be IOFED, but I'm thinking price may come back for that at one point or another. But down here, no real areas of inefficiency. What we can say on this time frame is our demand, or our supply is going to be up here. Supply daily. And we'll see what happens here if it continues to go higher and target the daily fair value gap above. And there's a daily fair value gap below that it may reach for before continuing back to the upside. And you can see this is all liquidity as well. So all of this was liquidity that was, oops. Let's just leave it as resting. Looks better that way. So yeah, you can see all this liquidity that we had on the left, which was all swept. And if it wants to go to the extreme, our daily demand is way down here. Okay, let's move on to the next time frame. Okay, so now on to the 4-hour time frame. So for now, the daily range is here. The 4-hour range is actually in this area. So for now, this is our range low. Massive push to the downside, massive push to the upside. So nearly filling the fair value gap. No inefficiency up here. Supply is going to be up here. All the inefficiency was taken out with the next candle. Some inefficiency here that's overlapping that daily fair value gap. This 4-hour fair value gap right here was mostly filled with that push up on Friday. Yeah, you can see more clearly here how all that liquidity was swept. On this drive down. If it came deeper and tapped into the daily fair value gap, I would say it's more likely just to continue up from here. Actually, it did something like that on Dixie, so potentially this could be the turnaround point. There is some fair value below. So it could come back for that before pushing to the upside, or may push to the upside, then come back for it later, and then turn around and target the highs. So the daily fair value gap is more or less aligned with the 4-hour time frame. 4 hour is going to be a little wider. And most of this has been mitigated, so I would focus on this as the 4 hour demand. Also swept all of that as well. Actually, let me just do a copy. Yeah, really nice sweep of this liquidity as well as this liquidity. So potentially this could be the low and we start to see price turn around and push up from here. And moving forward, I could probably go down to the lower time frames, hourly, 15-minute, and do the same thing. Generally the process is going to be identical. The main thing you want to do is have a clear idea of where those inefficient levels are, so it's clear where price may want to go to, as well as monitoring the liquidity levels so that we can see if they're swept, that could be a potential turnaround point. So in this situation, you see it's swept on both sides, so it's a little unclear, especially as it's in the middle. But knowing that the overall structure is bullish, this could potentially be the end of the pullback before reversing. So anyways, that is more or less how to mark your charts. Now, if you watch the next video, then I'll explain in a little more detail how to analyze the charts that you just marked. Anyways, that's it for this video. Again, the goal of this video was only to explain how to mark up your charts. In the next video, I'll explain how to analyze them. Hopefully you guys found some value in today's video, and if you did, a like and a subscribe would be appreciated. I'll see you in the next one. Peace.
Black Swan.